we here on the Financial Exchange have been focused on equity markets and the reaction to the president's announcement on tariffs on China. What has also been making a very big splash that we focus a little bit less on typically is what's happened in crypto markets since then. And to be clear, the sell-off that occurred, total liquidations on crypto derivative exchanges, hit an all-time high, and frankly, it wasn't even close on Friday. It was the biggest liquidation event you've ever seen in crypto. Doesn't mean it was the biggest sell-off you've ever seen on a percentage basis, but it was a massive event. It raised over $19 billion in value from the cryptocurrency. We were sitting at around 9:30 a.m. crypto. Bitcoin especially was sitting at $122,447 per coin. By what time is that? By around 5 p.m., you got to a low of 108,000, a massive sell-off. It recovered some of that. Today, you're sitting at about $111,000 per coin. But you had this massive sell-off occurring, seemingly sparked by the president's announcements on tariffs. And because of the way that crypto trades, we're able to tell something very specific, which is two accounts made $160 million in trades on this specific information, and many of them very suspiciously timed with the announcement from the president.
Yeah, $160 million of profit on these two particular trades. One was placed a minute before Trump's tariff announcements, sparking speculation, as you would imagine, that this was an insider trading move. The other was slightly earlier, but between these two, it was deposits of $80 million and $30 million were put into accounts that were betting on Bitcoin going down. And then, like you mentioned, within minutes after the announcement that Trump made against China for potentially 100% tariffs, you saw a 12% drop in Bitcoin, making these positions that they took, which were short positions, basically betting on Bitcoin going down, incredibly lucrative. So, like has been an issue historically with the stock market, issues with insider trading,
But at least with the stock market, like when you have something like this happen, so, for folks that aren't familiar, let's say you buy shares in an individual company, and minutes later it moves up on an announcement by the company when it comes to some material fact that they had to disclose. The SEC tracks all of those transactions to your brokerage account and goes and talks to those folks. There was actually a local police officer in Massachusetts who was charged with insider trading based on this exact series of facts. He got some insider information from someone, I think it was at a biotech company, if memory serves me, placed a bunch of trades. I think the guy went to prison. Mm-hmm. If you personally own crypto today, this should make you furious because this is profiting at your expense. Again, I find it hard to believe that the timing of these trades, right, a minute before the president's announcements on shorting a bunch of crypto, I find it really hard to believe that was not somebody that had some sort of inside information. I'm not making, allegations that it was a member of, anyone's family, but it could be a press reporter. It could be, somebody who knew this announcement was coming. It could be a social media manager, who knows? But if you invest in crypto personally, this type of thing should make you absolutely furious because it is costing you money as somebody who believes in this stuff. So this stuff should make. It's also where I lead to my belief that eventually this is going to piss off enough people that this stuff's going to be regulated just like stocks.
Right.
And frankly, stuff like that should be. Right?
Sure.
If it's proven that you're in fact trading on inside information, that's illegal and it should be gone after. But because of the nature of the regulatory environment for crypto, it makes it much easier to do in this space, whereas you just cannot pull that sort of thing off in the stock market.
What's so funny is that it would move this much on a policy announcement on
That's
economic
completely
policy.
unrelated to crypto.
Right. I mean, that was the whole focus behind crypto in the first place. It was something that was supposed to be not correlated to anything, economic or in the markets, and yet you have it moving significantly off of something that the stock markets would move equally quickly on.
It is very clear to me that at this stage, most of at least the major, and we didn't even, we were talking about Bitcoin here. We didn't even talk about some of the smaller coins that got completely wiped out on Friday. But at this stage, for most of its time, if you go and track this and chart it against like the NASDAQ, it's basically trading as a leveraged NASDAQ type of holding, right? It's just a very volatile read on what's going on in the stock market. There can be other outside things that move it in one direction or another, but that's what it's looked like. And so when you have a massive announcement that is going to move stocks, it's a very easy thing to trade on with far fewer ramifications than making the same bet on stocks, because you can be sure if somebody had shorted a bunch of the S&P 500 right before this announcement, they'd be getting a call.
Oh yeah, big time. Just to expand further on the leverage piece, what Mike's alluding to is this idea that, hey, if the NASDAQ were to go down 1-2%, that typically something crypto related that has more enhanced volatility characteristics would go down 5-6%, multiple times what you'd see from the major indices out there. And that's the deal with investing in crypto. It's very volatile.